Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we're diving into a captivating topic: unlocking double opportunity in 3 to 6 months. Top 3 stocks poised to explode. Are you eager to see your investments doubled in a mere 6 months? Well, you're in for a treat. In this episode, we've unveiled 3 remarkable tech stocks that hold the potential to be your ticket to financial prosperity. So fasten your seatbelts as we embark on an insightful journey exploring these 3 promising tech stocks that just might double within 6 months. Now get ready for an in-depth discussion on these 3 stocks that carry the promise of doubling your investment in the coming 6 months. These companies are shaking up the tech sector, and we're here to reveal exactly why they deserve a prime spot in your investment portfolio. Let's dive right in and explore these stocks from the top 3 to 1. Top 3: Weave Communications, or WEAV. Let's kick things off with our top 3: Weave Communications. Among our top 3 tech stocks with the potential to double in just 6 months, Weave Communications shines. This Utah-based software company is making remarkable strides with its communication and practice management solutions tailored for small and medium-sized businesses. Weave's journey has been nothing short of intriguing. Since its IPO in November 2021, it has grown into a well-established player in the market. Despite encountering initial bumps, Weave's allure as a growth opportunity is undeniable. This is primarily attributed to its consistent revenue growth and notable strides towards profitability. Fueling its rise is a comprehensive suite of cloud-based software and hardware solutions, empowering healthcare providers to revolutionize patient communications, automate administrative tasks, and enhance overall efficiency. The company's growth prospects are further fortified by its diverse services, which caters to a wide array of industries. This expansion has expanded its total addressable market, or TAM, to an estimated $12.5 billion. Examining its financials, Weave presents an encouraging picture. Demonstrating consistent growth, its top-line revenue has witnessed a remarkable year-over-year increase of over 20%, along with a 3-year compound annual growth rate of 45%. Significantly improved non-GAAP gross margins reflect an upward trend in operational efficiency. A noteworthy milestone arrived in Q1 2023 when Weave reported its first positive free cash flow. This modest achievement underscores Weave's ability to generate cash from its operations, paving the path towards profitability. Comparative analysis with competitor EngageSmart, which commands a higher market capitalization due to profitability, hints that Weave might be undervalued in the short term. As Weave approaches profitability, its multiple could escalate to around 8 times, potentially reaching a conservative 10 to 12 times in the long run. Investors should closely monitor upcoming earnings presentations and quarterly reports, which could serve as catalysts for Weave stocks. Positive trends in free cash flow and achieving or surpassing management's ambitious guidance could significantly influence the company's valuation and share price. In essence, Weave Communications presents an alluring investment opportunity armed with a clear growth strategy. If the company maintains the strategic execution and continues to meet or exceed guidance, it could well be on the path to unlocking its full potential, making it an excellent long-term investment choice. So don't forget to consider adding Weave to your watch list. Top 2: Celestica, CLS. Here's our top 2: Celestica. This Canadian electronic component manufacturer has surged back from a post-quarterly earnings dip, making it a captivating prospect for investors seeking to capitalize on growth opportunities. In its fiscal first quarter report, Celestica showcased its resilience, exceeding revenue estimates. While it missed earnings per share targets, the stock rebounded from below $11 to $13. For long-term investors eyeing growth prospects, this presents an intriguing opportunity worth delving into. In Q1 of 2023, Celestica reported an impressive 17% revenue increase to $1.84 billion, accompanied by an improved operating margin of 5.2%. This growth was propelled by its Advanced Technology Solutions unit, which capitalized on robust sectors like industrial, health technology, and aerospace and defense. With demand riding high and materials becoming more available, the company might even consider revising its guidance in the next quarterly report, offsetting any softness in its capital equipment business. Celestica's diversification strategy received a boost from its Connectivity and Cloud Solutions or CCS segment, which experienced a substantial 20% revenue surge. Supported by improved material availability, the company met demand in the enterprise and communications sectors, mitigating any decline in the networking segment. Financially robust, Celestica boasts around $600 million in borrowing capacity and a net debt position of $304 million. This favorable financial position equips the companies to navigate market challenges adeptly. Looking forward, Celestica anticipates enduring market weakness in capital equipment affecting communications revenue. However, the company remains confident in outperforming the broader market in 2023, with a forward price-to-earnings ratio of just 6.37 times. Despite market caution regarding new green energy program launches, Celestica's strong commercial aerospace business and the normalization of air traffic presents promising avenue for revenue growth. In conclusion, Celestica Incorporated is riding a wave of strong revenue momentum, earning a quant rating of 4.32 out of 5. For long-term investors seeking a growth-oriented tech stock to diversify their portfolio, this might be the one to watch closely. So keep Celestica on your radar as you explore potential investment avenues. Top 1. Adobe Incorporated. Let's focus now on our top 1, Adobe Incorporated or ADBE. As we delve into the final tech stock with potential to double in 6 months, Adobe emerges as a dynamic force in the software sector. Recent times have seen a notable uptick in Adobe's shares, driven by the excitement surrounding its AI capabilities. While its latest earnings matched expectations, investor confidence is on the rise. Adobe's strides in introducing generative AI features are evident, including integration into Photoshop and the innovative Firefly technology, a suite of creative AI models. Firefly has already garnered millions of interactions from customers, underlying Adobe's tangible value in delivering advanced AI solutions. This AI leadership, coupled with seamless integration into existing workflows, resonates with investors. Adobe's financials remain robust, marked by consistent revenue growth and healthy operating margins. The company's solid balance sheet, abundant cash reserves, and strong asset-to-liability ratio fortify its financial standing. Looking ahead, Adobe's growth prospects shine. Firefly extends beyond Photoshop, seamlessly weaving into offerings like Document Cloud and the Content Management System. By strategically infusing AI into products customers already rely on, Adobe's positioned itself for commercial success. Though the full financial impact of generative AI awaits, early customer interest and Adobe's execution are promising. While the stock awaits the full benefits of its AI rollout, the market's optimism signals a bright future for Adobe. While obviously Adobe Incorporated stands tall as a major AI-enabled software player, watch for Adobe's AI-driven progress, paving the way for an exciting future. To diversify your investment radar, consider adding Adobe to your watch list. Stay tuned for Adobe's journey through the evolving AI landscape. To sum up, Weave, Celestica, and Adobe have all demonstrated a pattern of steady revenue growth, solid financial performance, and forward-thinking strategies that position them favorably for the road ahead. It's crucial to keep in mind that investing inherently carries risks. While these tech companies have captured the attention of investors, it's essential to conduct comprehensive research, align your investment choices with your financial objectives and risk tolerance, and remain vigilant in the dynamic and sometimes unpredictable tech market. That wraps up today's video, where we dive into 3 tech stocks with the potential to double within 6 months. We'd love to hear from you in the comments. Which of these stocks caught your attention the most? Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.